There's no right wrong way of doing this. I'm just giving you examples of how to use this tool to look at short and long term inventory in the market to give you an additional edge in context regards change. So here is a current example of crude oil. We are currently in October now, and I just thought I would use this example as a recent example for crude oil. So obviously we put a top in crude oil about $107 a barrel, and we broke out to forming this trend to the downside. So in this example, I've chosen this bar to run the Midas VWAP off. We could have run it off the top bar, this bar. It didn't matter. They all pretty much line up the same, but in this example, I've used this bar to run this inventory from. And as you can see, the imbalance occur. We see a reversion to the mean. We see a brief pause in the market, and the market starts to become imbalanced again. So the best way to approach this would have been, if for a long-term swing, would be to start to run a short position. Once we see this break back into value, then you could exit and wait for further information. Once the market started to reference VWAP and we started to see this balance come into the market, as soon as we broke out of that balance, then you could re-establish a short position with stops inside value. And as you can see, since then, the market has seen a very big imbalance to the sell side, and we've trended all the way down for a few months now. For 4 months, I believe we've trended down in crude oil. And the market started to reference this 1.5 standard deviation. But the point being is, you can see how well the market represents and rejects value. We started to see this two-way trade come back in, and then the market almost broke back into value for a mean reversion here, and you can see how aggressive sellers entered the market, pushing this back out of value here now. I just thought this would be a great example to run for the current market conditions in crude oil with this trend down this year off of the highs. And we are currently still in a bearish trend, and we're still out of balance to the sell side. This is a very macro perspective, but obviously, like I said, this helps generate a trade thesis for you from macro to micro to help you better understand what the market is trying to do. Now I'm going to explain how to use intraday Midas VWAPs applications, which are probably going to help you for your intraday trading. So this is an intraday example of crude oil. As you can see here, again, same example from macro to micro. The market starts, we see a change in the market, we see a key fractal low, and we see buyers enter the market. We see an imbalance occur to the buy side. The market sees a very strong buying imbalance, so strong that the market starts to execute off the 1.5 standard deviation. Once this order has been filled and the market has finished executing to the buy side, we see two-way trade start to come back into the market. The first clue would have been the break of the 1.5 standard deviation. We came back in, value caught up at price, and we see this attempt to break out. Once we couldn't break out and the market entered back into value here, there was no edge staying long, and you exit any core positions. And as you can see, as soon as the market came back into value here, we see a mean reversion and a destination trade to the other side of value. So you can see how powerful this can work with imbalances in the market. When the imbalance is over and that HFT algorithm, investment bank, hedge fund, whoever it is in the market, along with other traders executing off of this Midas VWAP, once this imbalance is over, we see the change, and there is no edge staying in the market anymore in that direction. Similar example again, just buying, rejecting the 1.5 and the 1 standard deviation the whole way up. We see this break of the 1.5 after a nice big imbalance of buying here. We see volume start to come in, and the market enters the value, the 1 standard deviation. Once this happens, again, reversion to the mean. So again, the principle in this is, once we see these imbalances occur and we start to execute and trade with these imbalances, once we see the change where the market breaks back into value and shows balanced two-way trade, there is no edge staying long in the market. And you can see, again, through multiple examples that I've shown in this presentation, once we break that 1 standard deviation, the likeliness is a reversion to the mean. It's just the way the market auctions. So we see the imbalance occur, we see two-way trade come back into the market. So the market auctions down to the mean price, auctions to the high price, auctions to the low price. It's just generally how the auctions play out. And this is why we see pullbacks in the market in a trend, and this is why VWAP is so powerful, because we can use this for very precise executions levels for your trading and for identifying key changes in the market. Just an example now to the sell side. So we see a selling imbalance occur, we see sellers step in, we use the key fractal high, and then the market becomes imbalanced. We break out this balance, this two-way trade area here, and you can see the market starts aggressively executing off this 1.5 and 1 first standard deviation, all the way down until finally we find a buyer. Once we find the buyer and the selling imbalance is over, we break back into that first standard deviation and we see a reversion back to the mean. Again, key context. We have seen change in the market and there is no edge staying long or short. In this example, there was no edge staying short. And if you didn't catch the short, then you could always look for the reversion to the mean and a destination trade to the other side. But as you can see here, you can see the selling imbalance. You can see how the auction process works. We see selling imbalance, we see reversion to the mean, a test of the developing value area high, we see more business being done at VWAP, we see auction to the developing value area low, buyers step back in and the market starts to become imbalanced again. The market becomes imbalanced, we start seeing execution of the 1.5 standard deviation, we finally break back into value for a mean reversion. This is just examples of how the auction process works and how the market trades around these Midas VWAPs. Here's just another example. So on this day here, you can see that we see buyers step into the market. We just see two-way trade off the open. We see buyers step into the market. We finally find a key fractal area. We see two-way trade come back in. We can start to track this this selling inventory. If we obviously put a new higher in here and we broke through this first standard deviation in 1.5, then this Midas VWAP would have been invalid and we wouldn't have been able to use or execute off of it. But as you can see, once this imbalance started to happen, we started to execute off the first standard deviation and the 1.5. Again, you can see how this channel comes into play, where the market executes off the first and the 1.5, and we see, as I said, this channel in between the first and the 1.5 all the way down. A little bit iffy here. You could have faked you out with a break back in, but a good way sometimes to trail this is off that half standard deviation inside, which is not plotted here, or you use the general context of the market. But either so, you would have caught a majority of this trade even if you did exit this core position here. But as you can see, the market came back in. We see aggressive selling back out of the market. We see this final push down to this big cluster of buying volume that you can see here, and then the market enters back in, and you see change. So if you did exit your core position here or here, I mean they're pretty similar prices anyway. So regardless of you not being able to catch this whole move, you can see the powerfulness of how these Midas VWAPs work. And you can see as soon as we come back into value here, we see reversion to the mean and almost to the other side. So the market is approaching trade location. Start seeing the buyers coming into the market, absorbing the sellers here. So start to run a Midas VWAP from the low. This will be where your entry is here. So now you'll be long from 92. 32 with stops back inside the previous value. Obviously what we want to see now is the market not make a lower low, and we want to see responsive buying back into the day's developing value here. And as you can see, the algorithms are starting to execute off of the Midas VWAP. So finally we see a buyer step in, we see an imbalance start to occur, we see the price push back into the developing value on the day. Now we want to see the algorithms starting to execute off the top of the developing value of this Midas VWAP I've just anchored on the chart. So now we've seen the pullback to the developing value area high on the Midas VWAP, and we're going to start seeing if the algorithms start execute off the top of the developing value here. Okay, so we've seen a push down to the Midas VWAP and into the developing value area low for the day, and we've seen responsive buying again off of the mean of the Midas VWAP with confidence with the day's developing value area low here. So by now you should have had some scales out, and you should be managing a core position from your established trade location. If we start to break through the developing value area low on the day now, and we start to break through the mean of the Midas VWAP, then this trade is invalid, and it's a heads up to get out before you take a full stop. As you can see from these wicks, the algorithms are starting to execute off the top of the developing value here, and we want to see an imbalance start to develop now. Again, a pullback to the top of the developing value area higher. We're seeing buyers starting to come in. Okay, so finally more buying. Now the Midas VWAP is starting to see an imbalance. We want to see algorithms starting to execute off the top of the developing value. You should have had more scales into the mean of the day. And obviously we've seen a push up here now to that previous highs, so we want to see responsive buying out of the highs for continuation. And if we start to break back into the developing value area high on the Midas VWAP, and we start to break the mean of the Midas VWAP, then again it's probably a heads up that this trade might be over. It might be worth getting out of the position. So we're just seeing some liquidity coming in on the day's mean prices here. You can see that the developing value on the Midas VWAP is catching up with price here. So again, we want to see algorithms executing off the top of this developing value. Confluence with the day's mean. So again, we're seeing price catch up, value catch up with price, and we're seeing buyers entering the market, and the Midas VWAP is showing imbalance to the buy side now. So this could be your final target as a destination trade. Obviously we're pushing an outside day now, so you could look for further imbalance to the buy side, and you could exit the position on any break back into the developing value area high on the Midas VWAP. You can see that the algorithms is now starting to try and execute off the 1.5 of the Midas VWAP here. We just broke that, and we're just pushing back down to the developing value area high. So again, if you've not had your final target filled, then you'll be looking to exit your core position on this trade once the market breaks back into this Midas VWAP developing value area high. Price value still catching up with price on this Midas VWAP from this anchor point. It's coming back and testing that previous high of day now. So this is where you'll be looking for either a flush back in, and or algorithms and the HFT is still executing off the top of the value here. Okay, so we're still seeing some buying off the top of value, and we're still not seeing a clean break back in. So at this point here, you can start managing your position and either putting a stop below the mean for the day, or you could start just putting a tight stop below this area in case we see a break flush back into the Midas here. Okay, so now it's the heads up that the imbalance is over for this trade now, and you should have exited your core position now. Okay, so we're seeing a potential another setup here. I mean, the market is still showing two-way trade balance on the day. Obviously, we see a gap open on this day. We've seen a reversion back down to value. We've seen two-way trade back in the market now. So what we want to see is push back up to the 1.5 standard deviation, and then we put stops above the high of the day. If we are going to see a further imbalance and rejection on the day, then the market will break out above this 93.46, and we'll see a potential imbalance created on the day here. But at the moment we're still looking rotational, so we're going to see what happens at this 1.5 standard deviation. So you'll be putting a sell limit at 93.30 here, with stops above the RTH highs, expecting continued two-way trade. So you wouldn't have been filled yet. You'd still be waiting to see this market here. If you don't get filled at the 1.5 standard deviation and we see the sellers come in, then you try to sell the bounce back up to the developing value area high with stops above the 1.5 standard deviation and the high of day on the pit session. So you can see the battle here with the buyers and sellers in the market with two-way trade here. There's no clear imbalance at the moment. Even though the path of least resistance is to the buy side, we are seeing sellers enter the market here. Okay, so you would have moved your, no, you would have kept your order at the same place. Okay, so now you would have been filled short, and what you want to do is see this high hold now. I mean, if we see buying into the 1.5 standard deviation here, and we come up and test the highs, then you're wrong and you get stopped out. Okay, so now we're starting to see sellers enter the market, so we can start to run a Midas VWAP from this high now. We want to see algorithmic trading, and we want to see what happens here with this inventory coming into the market now. So again, you want to put your stop above the high of day now. So you probably have your stop at 50, if not 60, to give this a bit of room to breathe. And what you want to see is, obviously, you don't want to see the market start breaking that 1.5 standard deviation now, otherwise you'll be wrong. So we're still seeing a bit of a battle here. We're seeing buyers and sellers, two-way trade in the market, but the sellers are present, as you can see, and we are starting to see execution off this Midas VWAP. So what we want to see now is we want to see a push back into value, and we want to see an imbalance start on the Midas VWAP that we've tracked from that anchor high now. So your first scale is going to be into this into that previous high, and so your first scale is going to be around 95. If not, you can put it a couple ticks above the Globex VWAP, above the RTH VWAP, sorry. So now there's a potential for your scales, and as you can see, there's an imbalance on this Midas VWAP now. So what we will look for is we will trail your stop in, just above VWAP, or you can take an exit as we break back into the Midas VWAP, showing that the imbalance is over to the sell side on this from this fractal high. So we're starting to see some liquidity come in at this VWAP mean on the day. And what we don't want to see is, like I said, we don't want to see this break back in and break above the Midas VWAP mean at the minute. It's still quite early, so we have to see what happens here. Sellers are trying to now lock price back into that previous day's range. And again, we're seeing selling off the developing value area low of this Midas VWAP now from this running inventory. Obviously, if the buyers are here at the mean of this of the day, then we're going to break back in, and it might be a heads up to get out of this trade. Still seeing two-way trade at this mean price. Trying to push back in now. So again, best place on this, as it's quite early, would be to trail your stop above the mean of the Midas VWAP here, but ideally we don't want to see it break back in here now. When we want to see aggressive selling to the sell side. The value has caught up with price now from that fractal high, so again we want to see sellers pushing the market down here. Okay, so this is make or break for this trade now. We want to see execution, and we want to see selling off the mean of this Midas now. And as you can see, the market came back, tested it, and you can see the algorithm executing off of that mean price. So now we want to see a breakdown. If we don't see a breakdown here, we'll most likely come back up and break the Midas VWAP, and that will be a heads up just probably to get out of your trade. I mean, this is a rotational balanced two-way trade market, so I mean, obviously the theory behind these type of trades is obviously stop above the high, and we don't want to see any further upside on this market. But regards how to use these Midas VWAPs, this is the correct way to use them. So again, are we going to see a seller come in and commit, and we're going to see a further imbalance, and or we're going to see buyers off the day's mean, and we're going to break the Midas VWAP and head back to the developing value area high? Still seeing a battle at this previous high of day. It does look like buyers have entered the market here, so if we do break down, we're probably going to see them get stopped out, and we're going to see a further imbalance on this Midas VWAP. Okay, so value has caught up with price quite well here now on the anchored VWAP. So again, we want to see a flush down here now. If not, this will most likely reverse back to the developer value area high and potentially break out of the higher day. You can see there is selling coming into the market here as the average is being pulled down into price at the minute. Okay, so there's the sell-in. There's going to be stops from any buyers that are coming in there that are weak, and we are starting to see further imbalance on this Midas VWAP now. So again, the idea will be, now that there is an imbalance in the market, we want to see some nice sell-in, and we want to see the algorithms executing off of this developing value area low. So here's the pullback to the developing value area low. So you're monitoring this for selling execution off of that area. And as you can see, sellers are here presently. Are they going to push the market down, or are we going to break back higher? Now, obviously, you should be scaling some more contracts off of your running core into the developing value area low on a day, and waiting for further information in regards to what we're going to do here now. So you should have a resting buy limit at 59.60. Okay, starting to execute off the 1.5 of this anchor VWAP now. Getting close to where your second scale should be. If not your final target, if you're looking for a destination trade, it just depends what you are looking to do here. Obviously, we've come back in for an inside day now, so you could potentially be looking to target the developing value area high or the point of control VWAP from the previous day. Still, we see an execution off the value area low here on this Midas VWAP. Heading towards your second scale here, if not your final target. Okay, so this should be your second scale, your final target filled in the trade now. If you are getting your second target filled and you still have a core running position, then what we want to see here is obviously a breakdown, and we don't want to see the market, obviously, like I said, trade back into the developing value area or above this mean price on this anchor VWAP. It depends on how you want to trail the stop, depending on the aggressiveness you're seeing in the market and the context on the day. Again, you can see how they're starting to try to execute off the 1.5 here. Might pull back to the developing value area low, as we are right at the developing value area low for the day here now. But at the minute, we are currently imbalanced on this from this inventory from this high, and we are still seeing sellers come into the market here. Some two-way trade and targets getting filled, and potential buyers coming into the market off the developing value area low for the day. So again, if we do break back in here, then it probably just a heads up to get out of this trade from the area that we're in. Still seeing sellers trying to sell into the developing value area low, value catching up with price from this Midas VWAP. So what we want to see is a continued sell-in, and we want to see a spike down here. Okay, so there you go. Anybody who was buying there just got stopped out. They just got flushed out of the market. We're still seeing an imbalance on the Midas VWAP, so you're still running your core short if you're in a runner. You can see how it's how they're lining up now. So the developing value area low on the Midas VWAP, and for the day now is acting as confluence. So, and again, with this imbalance now and this range extension, we don't want to see the market break back in. And if the market does break back in, it's just a heads up to exit your core. So you could obviously be targeting the developing value area high for the day, depending on the context, or you could just, obviously, like I said, just leave this run in until the market comes back into balance on this current inventory. You can see the targets and potential buyers coming into the market here. Sellers are still overwhelming the bid and bidding the market down back into that previous value. Still clear imbalance here. You could run the second Midas VWAP from here now and just see how this plays out, as you're looking for any excuse to get out of this market as an exit. For the sake of this though, I'm going to continue to run this off of this fractal higher. As you can see, they are executing off the 1.5 standard deviation now, as this imbalance is quite strong from this inventory, and we are trying to lock price back in. So now we're looking to target the mean from yesterday, or you could be looking for a destination trade all the way back to the lows. Just depends on what your plan is here. Okay, starting to break that 1.5 standard deviation here. See if there's any aggressive sellers here. Clearly see at this price level, this 92.05, there was some resting limits absorbing, so there was buyers here. Okay, so now we're seeing a pullback to the high, we've seen a break of the 1.5 standard deviation, we're starting to reject that previous value area again. So here's just a clear area that you will be looking for. I mean, if we continue to break back into value here, then there's no reason to stay short here, and it's best to exit. So at the minute we have seen sellers trying to enter the market here, we are seeing sellers trying to execute off of this developing value area low, so we just have to monitor this. Okay, so we're starting to break back in now. Okay, so still seeing sellers. Just going to quickly check this this Midas here and see what's happened. So as you can see, we have come back in on this Midas. Again, I would probably just have anchored it from this fractal high, as it's more important. And you can see how the inventory was, how they were executing off of this. So again, just a battle here now. So your stop's going to be above this 92.32 level. If we break above this 92.32 level, then this trade's most probably done, and there's no reason to get out. You can see the market coming back here. So now you're stopped out. Okay, so this is just an example of how you can use these Midas VWAPs to trail your stops and your positions. And the reason being, the point is as you can see, that once we see these imbalances over on these Midas VWAPs, then most of the time that's pretty much that move done, and most of the time that's how you catch the maximum profits on these moves, especially on crude oil. This works very, very well on crude oil. And you can see here, as soon as we broke back in and we see this strong buyer come back into the market, then the market's just seen two-way trade, and we've seen a reversion to the mean on this Midas VWAP. So obviously I understand how hard it is. It's touch and go, because there's a couple of times here that you could have looked to get in and out, and but obviously with experience and a lot of time and effort, then you understand how these tools work, and you use them to the best of your capability. Anyway, I hope them examples show you how I use this Midas VWAP tool, and how Ben has showed me to use this, and the most effective way to manage your positions around how the current inventory is coming into the market in real time. Because whoever was up here looking to sell, and they start to sell and establish a position short, I mean, this isn't one guy. I mean, this is most likely some big order that's coming into the market, and they can't just come in and hit the bid down with 2,000 contracts, because they will just crash the market and get a real bad skew on the position. So what they will do is use algorithmic trading, VWAP orders, TWAP orders, to come in and execute at the best price they can, to get the best average price they can for that trade. This is the end of the Midas VWAP presentation. It's quite a short presentation, but there's only so much I can go through in this tool, as the basics of it are balance, imbalance, and just looking for change in the market, and obviously correctly anchoring these VWAPs. Anyway, I hope you enjoyed this presentation, and if you have any questions, then please ask on the